Let's cross over to Bloomberg's Mike McKee. Morning, Mike.
Good morning, John. We have a lot of numbers to go through. Jobless claims you mentioned, 216,000, a big drop back to where we were about 3-4 weeks ago. That's down from 228,000. So no problems in the labor market. Let's see on the Fed's inflation mandate. The PCE price index comes in 0.2 higher, which is above last month, but as predicted, which leaves us at 2.1% for the headline number on a year-over-year basis. The core up 0.3. That is what was forecast, and that leaves us at 2.7%. Same as last month. There was an expectation it would fall to 2.6. Personal spending up 0.4, stronger than anticipated for the month. That's real personal spending. Regular personal spending unadjusted up 0.5. That is also higher than anticipated and significantly up from the prior month. Personal income's up 0.3. That is as expected. So the other number we have out, the employment cost index, up 0.8, down from a 0.9 gain. So at this point, to sum it up, before I go into all of the underlying numbers, we've got no problem in the labor market, no problem with inflation, and it looks like companies are getting either some higher productivity, but they're spending less money to get done what they need to get done.
Mike and McKee, I want to sit on one number, and we'll make it really simple. And the number's 216. The estimate was 230. 216. Now, a word that's been used a lot over the past few weeks regarding the labour market, noise. Get ready for noise. What noise really meant, though, was weakness, but weakness that you can look through. Michael McKee, we're going into payrolls with jobless claims at 216. How on earth are we at 216 when economists are running around saying, get ready to discount the jobs numbers tomorrow? You're going to see a hurricane impact. You'll see a strike impact, maybe some noise regarding the election as well. Mike, how do you frame a 216 this morning?
Well, it's hard to put it in the context of a feeling that you're going to go into recession or see a problem in the labor market. But the one thing you can look at is the fact that the jobless claims represent last week and the hurricanes were at the beginning of the month. And this represents unemployed people who were filing first-time claims versus people who are no longer on the payrolls, which we will find out about tomorrow. So two different things, but it does tell you that companies are not laying off people yet. So it doesn't look like the economy is going to be in terrible shape. Now, the thing we need to look at when we look at this is the number of continuing claims, and continuing claims do seem to rise up to 1.1862. Actually, they come down. From 1,862,000 to 1,888,000 was the previous week. So I lied. It does look like we're not even seeing hurricane kind of stuff anymore left in this.